What up, 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 what up? Weekend recap of the backtesting session. The backtesting session of my strategy on the higher time frame. I usually trade on the lower time frame, that is the 1 minute and the 5 minutes, but I'm starting to look at the high time frame. That's the 1 hour execution on the 30 minutes and the 1 hour, and the structure on the 4 hour. Let's go. So we start with the latest. Which have occurred the previous week, which was on the 8th of Feb, on the 6th of Feb, until the earliest, which was the Jan 26th. So let's start with this. So we look at the high time frame. Price was pretty bearish, but the overall when we come to the one on the daily, when it comes to the daily, price is pretty bullish. So the past weeks or month, price has been pretty bearish. So price came on the 4 hour, swept this 4 hour sell side liquidity and rejected to the upside. So this is the liquidity that has been swept. I'm only talking about my strategy. So price was pretty bearish, making lower low, lower high, lower low, lower high, lower low. It reached a support zone, swept this sell side liquidity and is rejecting to the upside. We get a 4 hour bullish closure, meaning we are being supported. Now let's go to the 1 hour time frame. On the 1 hour time frame, this is the trade. 1 hour time frame, this is the trade. So liquidity, sell side liquidity swept, 1 hour rejected to the upside, and 1 hour made what do we call it? 1 hour made the first presented EM on the 1 hour, retested it on protocol 2 of our strategy, then price closed above the protocol 2, meaning we are in. So if it was on the 1 minute time frame, I could have entered once price broke above this high here. It indicates we are good for entry. So I could have executed the way this trade has been set up is the way I could have executed. But since I am looking on executing on the 1 hour and the 15 minute, so the 1 hour looks good. Remember the 4 hour already closed bullish. So the 1 hour looks good. Let's go to the 30 minutes and see what's popping on the 30 minutes. So on the 30 minute time frame, where we ought to, I plan to, if I ever go high time frame, I plan to execute on the 30 minutes and the 1 hour. So on the 30 minutes time frame, we have the 30 minutes making its first presented entry model, which is a bullish fair value gap. After the sell side liquidity has been swept, this is the sell side high time frame sell side liquidity, the dotted line. Price makes its first presented entry model. It's a bullish fair value gap. Price retests that fair value gap to print a higher low and closes above the lower high, above this lower high, making a higher high, meaning price is bullish. Now I did not put my entry here because on the backtest session, this time frame is almost 1 a.m. of my time. So I put it here because this is London session. I could have woken up already and did my analysis. So we come back to the 1 hour. This is how the trade looks. Then the 1 hour is supporting. The 1 hour also has this fair value gap here. This fair value gap, and this is London session. I put it here because this is London session, and so I enter on the first presented fair value gap on the 30 minutes, and the lows are below this 1 hour lows. That's how the trade goes. Because I am looking on the higher time frame, these are just points where I will consider. These are points I will consider on taking partials or either because on the higher time frame I am thinking of holding when I go to the higher time frame. So these are points I will consider taking partials or just looking at price, seeing how price reacts at these levels. Seeing how price at these levels. This here is my main take profit because of we come to the 4 hour, that is the 4 hour. When you come to the 4 hour, that is the here it is, that is the 4 hour buy side liquidity that price needs to sweep before we consider it going lower. So that's it for the first trade. This is how it looks. Same setup as on the 1 minute and the 5 minute. The same setup I always trade. Exactly the same on the 1 hour. So let's delete this as we go to the lower so that we clear our charts as we go. So that we clear our charts as we go. This is the high time frame buy side liquidity I was talking about. So by the time we are finishing, we ought to be clean. Let's go to the second, back to the 4 hour. We go to the second trade. This is a high time frame execution. So on the 4 hour, price is price is bearish coming this way. Price reaches this point and which is a major support zone. This is a major support zone here. You see price, this is a major support. This is a major support. On this frame here, price came down, broke above and went higher. Price came down and reject to the high side. And since we are bearish, we will be looking for sales. So price made a lower low and we are looking for price to make a higher high, and price is making a higher. We look to take sales if price sweeps. Because we are bearish, if price sweeps sell side liquidity, buy side liquidity, we will be looking for sales. So this is how the 4 hour looks. Price rejects of this major support, sweeps this high time frame buy side liquidity, and that's the first indication that we should be looking for price to move. We go to the 1 hour. I go to the 1 hour, not we. I go to the 1 hour. I go to the 1 hour. This is the high time frame buy side liquidity I was talking about. This is the 4 hour buy side liquidity I was talking about. Price sweeps it, makes a higher low and goes higher. Meaning price there is another liquidity or something that price is reaching for. It might be here, it might be here. So on the 1 hour there is no buy side liquidity. We go to the 30 minutes or the 15 minutes, which are also good for spotting liquidity. So on the 30 minutes, here it is, here it is, here it is. So this is the high time frame buy side liquidity I was talking about. Price sweeps it, makes a higher low and continues to maintain the bullish structure. But price sweeps this 30 minutes buy side liquidity, makes a higher low and starts presenting as if it wants to go lower. So this is the buy side liquidity, the 30 minutes buy side liquidity. This is the high time frame buy side liquidity. So the dotted one is this dotted one is the 30 minutes. Price sweeps it and goes lower. Going lower, we come to on going lower, makes a higher low. We go to the 15 minutes. Ooh. And here it is. So on the 15 minutes, price makes an protocol 1 break of structure to the downside by inversing this 15 minutes inverted fair value gap. Price inverses it and closes below it. So we treat that as the first presented EM on the 15 minutes after this 30 minute buy side liquidity is swept. That's why we put the first presented EM. We go back to the now before going back, go back to the 30 minutes. I'm trying to hurry up the video because I don't want it to be too long. I'll be coming back to check to see on my analysis. So price goes lower, prints a higher low. So we are more focused on market structure, and we only utilize ICT in terms of entry and execution, but more focus is market structure and price action. Market structure and price action. So when price sweeps this liquidity, it prints a higher low. This is New York session coming into New York session. So this was London session when price swept this buy sell liquidity. Coming into New York session, price goes and retests the first presented. This should be here. Price goes and retests the first presented entry model, which is a 15-minute inverted fair value gap, and goes lower. Now this is a higher low, so meaning if price breaks this higher low it will have printed a bearish reversal, meaning it wants to go lower. Why do we call it a bearish reversal? Because look at price. Higher high, higher low, higher high, higher low, higher high, higher low, lower high. Price fails to break this higher high and comes to break a lower low. Now I could have put my entry here. Why? Because if price breaks this higher low, it would have made a bearish reversal, because it will be higher low, higher high, higher low, lower high, lower low, meaning it wants to go lower. And then our stop loss is just above the lower high that has been created, so that if price was to go lower and come back and break this, then my whole idea will have been invalidated and price will go much higher. I put my entry here because, as you can see, this is a one hour higher low, and I was pretty confident on it. So this is how the 1 hour looks: higher high, higher low, higher high, higher low, higher high, higher low, lower high, lower low. So I put a stop order here, and I look for 1:4. On this trade, price gives. So on the higher time frame, it's about holding and trusting my strategy. So price gives it. This is the weekly opening gap, where if I was on this trade, I will be keen on how price reacts to this. Price reacts in this area, and then I target 1:4, on this major support zone. So we go to the 30 minutes and see what this weekly opening gap did. So this is what I'm talking about. So after we put a sell stop order on the 1 hour higher low, price broke it, and price cap starts ripping to the downside. So on ripping to the downside, price invalidates this weekly opening gap. As I had already invalidated, but it's still a crucial point in price action. So price invalidates it again, and no worries. By this time, I either take some partials off, or my trade will have been even at 1:4, which is a good. So that is the second trade. We delete it as we go, so that we clear our charts. This is the 15-minute version fair value gap. Yes, sir. Let's see, what have I left on clearing here? I don't think I have left anything. Go back to the 4 hour to analyze our third trade. So our third trade, it's up here, which occurred on I think this day was FOMC day, which occurred on Wednesday 28th Jan 2026. Wednesday 28th Jan 2026. So why did it catch my eye during backtesting? Price was pretty bullish. Let's go. I even took a trade on this day, and I think it was a win, but on the lower time frame. But now I'm backtesting the high time frame to see, just to keep it behind my mind. So price was pretty bullish, making higher high, higher low, higher high. So price was approaching the all-time highs. This is marked here. These are the all-time highs. So these are the all-time highs I'm talking about here. So price price came and swept this buy side liquidity. These are high time frame buy side liquidity, and if at all times high, all time high, we either price either comes and sweeps and makes a new all-time high, or come and rejects very hard to the downside. Now, on this case, price came, sweep this buy side liquidity and reject very hard to the downside. Now that's why we see this down spiral to the downside. So let's go to the 1 hour. So on the 4 hour, the buy side liquidity I'm talking about was swept. Let's see. Now, price is printing pretty good price action. So price sweeps this high time frame buy side liquidity, makes a higher low, makes a lower high, which fails to break a higher high, makes a lower high. So if I was on this day, I took a trade, or I did not take a trade, but I have my analysis on my YouTube channel. So I took a trade, or I did not, but either way, the analysis on the YouTube channel. So on this day, during the entry of New York session, I was looking for sales if price sweeps this 1 hour higher low before it higher low. Let's put it at the center. So if price swept this 1 hour higher low here before sweeping the higher high, this is the 1 hour higher high, then I was looking for sales, and price did so. Price came, swept the 1 hour higher low on during New York Open, and now that's indicating that price wants to go lower. Why? Because price was bullish, and then it reached this point after sweeping the buy side liquidity. Price printed a bearish reversal. Why so? Higher high, higher low, lower high, lower low. That's a bearish structure. Lower highs, lower lows. That's bearish structure. If it wanted to go higher, it would have swept this higher high. Now we go to the 30 minutes to see what's popping on the 30. What's popping? So this is the trade on the 30. So on the 30 minutes, this was a FOMC day, so it was on a Wednesday. On the 30 minutes, price made this first presented entry model, which is a bearish fair value gap when price was printing this lower high. So I was looking for price, retested it and still broke this higher low, meaning price started maintaining bearish structure on the lower time frame. So on the 1 minute, this was when price, if price swept here before here on the 1 minute, I could have taken it, but on the high time frame, this higher low being swept is very crucial for price to confirm it wants to go lower. So yeah, price swept it, and I put my entry here because one, everything was, I'd already ticked, every confluence had already ticked, the setup was good and everything was new. So I was looking for price to come to retest this on the lower time frame, this some kind of support that acts as a resistance. So this was where I put I could have put my sell limit, and the stop loss is just above this lower high, which is the high above the first presented entry model. Same execution as was the one as my strategy on the 1 minute. On my target, these are 1 hour low, 1 hour sell side liquidity, and I was targeting this 1 hour fair value gap. So let's see to the 1 hour. Trying to hurry up on the video. Price still messy. So this is how it looks like. So this is FOMC day. So this is just backtesting. So real market execution, things could have happened differently. I could have lost. I could have I could have maybe managed the trade poorly. I could have gotten early. I could have gotten late. Maybe I could have held and moved to BE, and maybe I could have been stopped. So a lot could have happened. But this is just an analysis to show me that my strategy. I'm collecting data on my strategy. So yeah, let's delete this and we go to the fourth trade. Ooh, wow, 2 trades remaining. Trying to go speed. So on the 4-hour time frame, we have this. So on the 4-hour time frame, price, this is the weekly open candle. Price closed the week very bullish after sweeping 1 hour buy side liquidity. One hour buy side liquidity. Price was very bullish for the week. So we were at a major support. My strategy says bullish at a major resistance zone, not major support. So bullish at a major resistance zone. Price needs to retrace to sweep to sweep the nearest sell side liquidity while retesting a resistance, a major support zone. Then take buys off that support zone to the upside. Now, in terms of market structure, so let me repeat my strategy. So bullish, price is bullish. So my strategy in terms of buys, okay? So price is bullish at a major resistance. This is a major resistance zone here, of which we have some previous week opening gap here on this trade. So bullish at a major resistance. Price needs to retrace to sweep the nearest sell side liquidity while retesting a major support zone, not a major support zone. So this is a support zone here. Then break of structure to the buy side. Then take buys to buy side liquidity. So price open with a weekly opening gap, swept this high time frame buy side liquidity and closed and filled its own gap. The same time that this price action happened before I was on the charts this day. I think I took an L this day. I took an L. So price opened, came down and swept this sell side liquidity with this opening gap and filled this weekly opening gap just before during the London session. Now price again was at this major resistance level. What does our strategy says in terms of buys? Bullish at a major resistance. Price retraces and sweeps this 1 hour sell side liquidity, which is the midpoint of the weekly opening gap, which price had just filled. Okay, so price came and filled and just tipped the midpoint of the weekly opening gap. So our strategy says that bullish. Oh, biting my tongue here. I'm still learning my communication, so bear with me. So bullish at a major resistance. We are here now. Price retraces and sweeps this 1 hour sell side liquidity. We should look for break of structure to the upside. So when this buy side liquidity is swept, we look for break of structure to the upside, which will indicate to us that price wants to go higher. Now to take buys to high time frame buy side liquidity. This is the buy side liquidity. This is the buy side liquidity we are talking about. Now we could take partials from this point, these are just buy side liquidity. Now this is the full buy side liquidity. We'll see it on the 4-hour. So we go to the 30 minutes and see what I'm talking about. So this is what I'm talking about. Same execution. Price comes, sweeps this 1 hour sell side liquidity. I remember well on this day, we had a bullish SMT where ES had already swept this these 30 minutes lows while Nasdaq remained above. So everything was pointing out to buys. Now, price break structure to the upside. How so? We have this price make prints a lower low. Still, we come back to the structure. Lower high, higher low, higher high, higher low, higher high. Now, in regards to my entry, I go back to the 1 hour. Okay, I go back to the 1 hour. So let me delete this weekly opening gap for a minute. So when price sweeps this 1 hour sells a liquidity, it makes a bearish fair value gap. Now I am looking for price to fill this gap, which I need a 1 hour close above this gap before I can even consider taking buys. Why? So because price can just retest this and go lower. Price closes above this, which at 8 a.m. I also on the 9 at 9 a.m. 9 a.m. which 9 a.m. New York time, price closes above the gap. Now our indicating that the buys are a go. Let's return our weekly opening gap. Go to the 30 minutes and see why I placed my stop loss where I placed it. Yeah. Oh shit. So I put it here. I put it here. Now, this is the candle that's indicated that price just closed above the fair value gap. I think the work of the weekly opening gap is finished. Now, I put my stop loss just below this 30 minutes lows because there is another 30 minutes fair value gap that price retraced. This is the 9:30 a.m. candle. Price retraced that zone and goes high. That's why I think even my entry should be here. I put my entry there. Once this 30-minute candle closed bullish, confirming the buys are a go, I execute on my entry, and that is where I put my stop loss there, and that is how it turned out. This is the let's go to the 1 hour, 4 hour. So this is the 4-hour highs I was targeting. Meanwhile, you can take partials along the way, or you can just observe how price is reacting to those levels. I just observe how price, not you, I observe how price is reacting to those levels. Price reached this level, printed a higher low, then went higher. We are done with this one. We are done. So on the last one, on to the last. So this is the last high time frame trade. I'm really trying to be quick. So we are here. We assume all this has not happened. So in fact, we assume all this has not happened. So again, price was bearish after sweeping this buy side liquidity. Price came lower and rejected off this major support. Came lower. Why? Because we have a higher high, higher low, higher high, lower low, lower high, lower low, meaning price started printing bearish structure. We will see the bearish structure go well on the 1 hour. This is what I'm talking about, so that I refer it well. So I am saying price swept this buy side liquidity here, this buy side liquidity. So price swept this buy side liquidity here and rejected to the downside, meaning, and printed a bearish reversal rejecting to the downside, meaning price made a higher high, lower low, lower high, lower low. This is a lower low, lower high, lower low. So on price being bearish for the day, not for the day, at that point of time, price came down, swept this 1 hour buy side liquidity and rejected off this major support and rejected off this major support. If I think this day I was in the charts, yeah, I think I was. Oh, I don't know. No. This happened just on Asian session. So and rejected to the upside. So on the 4 hours, I was saying, what do we do on the 4 hour? We look at the 4 hour, and I think this was on Friday. On the 4 hour, price rejects off this major support. This is a major support zone, and we look for a buy side liquidity that price needs to sweep before it can go lower. Price comes, sweeps this high time frame buy side liquidity, this high time frame buy side liquidity. Now let's go to the 1 hour. Yeah, I was in the charts this day and I took an L. I remember, man. So price, because this is a high time frame play, I think it even took 2 days to play, because I was in the charts this day and this day. It took 2 L's, I think. So price came here, which was on Thursday. On Thursday, during New York session, price came, swept this high time frame buy side liquidity. I took an L that day. So price came on Thursday. So price started rejecting off that major support on Wednesday. On Thursday, it swept this high time frame buy side liquidity and went lower. Went lower how? Started printing bearish structure, meaning higher high, higher low, lower high, higher low, lower high, lower low. Now price just fell shy of this liquidity here and printed a higher low to go higher. So if you go to the 30 minutes, on price, I think the 30 minutes shows it better. Matters price action and market structure. This high time frame buy side liquidity. So price started rejecting here on Wednesday, just to show how these high time frame plays take time. So it started on Wednesday. On Thursday, high time frame buy side liquidity was swept. Price rejected to the downside. On Friday, price came and retested the first presented entry model, the 30-minute, the first presented entry model on the 30-minute, which was printed on Wednesday. So price came back on Friday to retest it. So this is 3 days, meaning the whole week. This is the setup I have been waiting for, because price on Monday there was nothing, on Tuesday there was nothing. So price started formulating a trade on Wednesday. On Thursday, sell side, buy side liquidity was swept. I have to be really patient on it. Still on Wednesday, after buy side liquidity is being swept, price break of structure to the downside, another confluence of mine, and printed a bearish entry model. So according to my strategy, this is my entry point and my stop loss is here. This is my stop loss. I'll tell you why I moved my stop loss there. So, and this is my stop loss. So we're coming into on Friday, price is still lingering or ranging around my entry model. Price has failed to fill it because it is still below this nini. And then on this day, remember, well, I took buys. I don't know why. Okay, I was not yet well off in market structure analysis, so I took sales. I took sales before market opened, and my stop loss were above this size, and I was shocked. I was looking for sales. So price came, swept these are London session highs, and manipulated to the downside. On the 1 minute, it printed something which is a good on it. So the reason I put my, let's see. So the reason I put my entry here was because I put my buy stop here, because this is confirmation that price wants to go lower. So if price, so I put buy stop here because this is a confirmation enough that price wants to go lower. So if this my entry model had been invalidated, I would have invalidated the whole setup and started looking maybe for another indication that price wants to go lower. So in this case, I remember this day ES remained lower. Nasdaq made a higher high, so the New York session price manipulation and price started coming lower. And here, so on this trade, the trade could have been finished on the Monday of the next week. Before this was on a Friday. Price came, swept this. Let's go to the 1 hour and witness what I'm talking about. So this was on a Friday. Price closed here. The week opened with a good opening gap to the downside, and because I was bearish, and this is high time frame, my trade needs to target some good lows. So I was looking for these lows over here, but I could have seen how price reacts on these lows of the session. So yeah, so that has been my backtest session for the weekend. Today is on Sunday, 15th Feb 2026. We'll see. So that is my session. So the way my strategy prints out, I've backtested it and noticed that it is the same price action as in the higher time frame. So the same price action that is in lower time frame is the same price action that is in the higher time frame. Now I'm looking to start looking more on high time frame, because high time frame market structure is a bit more relaxed, more calm, and high time frame market structure is a bit is sure than the lower time frame. Yeah, it's sure than the lower time frame, but I just have to be good at it. So yeah, it's 5 p.m. my time, Kenyan time. I have been working on this. So I have been in the charts today since 8 a.m. It's 5 p.m. I want to go on a walk, clear my mind. I'm tired. Yes, sir. Thank you.